What is happening in the company? Explains. Deepak Asher, Director and Group Head Corporate Finance, Inox Group of Companies. With the results, we have also uploaded on the website of the company a short presentation, and, just to set the expectations, this presentation is not as much about earnings or about quarterly performance as it is about what is happening in the company at the corporate level, because as you know, after the demerger of the chemical business, this company actually does not own any operations, so there is no operating income or operating expenses in this company, but it does own significant stakes in 3 subsidiaries. About 57% stake in Inox Wind Limited, around 100% in Inox Renewables Limited, and around 51% stake in Inox Leisure Limited. There is some corporate action that we are currently undergoing, and while we have not had this kind of quarterly update calls for the past few quarters, essentially because there were no operations in this company, we thought it would be a good idea to hold this call this time in order to apprise you as to where we are. So, with that backdrop, I will just give you a little bit of context in terms of the historical evolution of this company. As you might know, it belongs to the Inox Group, which is a diversified conglomerate, engaged in various businesses, including industrial gases, fluorochemicals, multiplex cinema theaters, renewable energy and cryogenic engineering. The company historically has been called Gujarat Fluorochemicals Limited or GFL, and this company has been engaged in the business of the manufacturing of chemicals which includes caustic soda, chlorine, chloromethanes, refrigerants essentially HCFC22, fluoropolymers essentially PTFE, and also some other fluoropolymers and fluorospecialty chemicals. GFL Limited. In addition to this chemical business, GFL is also carrying on some other businesses through its investments in 2 listed and 1 unlisted entity. It holds a 51% stake in Inox Leisure Limited, which is engaged in operating a national chain of multiplex cinema theaters. It holds 57% stake in Inox Wind Limited, which is engaged in the business providing turnkey wind energy solutions to its customers who are primarily IPPs. And it holds 100% stake in Inox Renewable Limited, which is engaged in the business of generation of electricity through renewable sources. Now, under the scheme that we implemented last year, the chemicals business undertaking of GFL has been demerged into another mirror image company, which we, for the sake of abbreviation, call GFL or Gujarat Fluorochemicals Limited, under a scheme which was duly approved by all regulatory and other authorities, including the board of directors of the company, its shareholders, the creditors, BSE, NSE, SEBI, NCLT, and the appointed date for this demerger was 1st April 2019. Hence, with effect from 1st April 2019, the chemical business is housed in a separate entity called GFL. Post demerger, the name of this company was changed from Gujarat Fluorochemicals Limited to GFL Limited, and the name of the mirror image company, to which the chemicals business was transferred, was called Gujarat Fluorochemicals Limited. In consideration of the transfer of the chemical business, all shareholders of GFL that held 1 fully paid of equity share of GFL were given 1 fully paid of equity share of GFL, and hence GFL in a sense was a mirror image company. So, essentially, if you owned 1 share in the erstwhile GFL, you would now be holding 1 share each in GFL, the holding company of the renewable energy and the entertainment business, and 1 share in GFL, which was the chemical business, and the share of GFL also was separately listed. So this is what we did last year. Now, in the current financial year, we have embarked upon another restructuring. As I mentioned to you, to give you the context of what we are doing currently, GFL does not have any operations of its own, but it owns 2 major businesses through its subsidiaries. It owns the entertainment business through 51% stake in Inox Leisure Limited, and it owns the renewable energy business through 57% stake in Inox Wind Limited and 100% stake in Inox Renewables Limited. Now, the board of directors, as a part of the business restructuring program, at the meeting in March approved a scheme which comprises essentially of 2 parts. Part A is the amalgamation of the wholly owned subsidiary Inox Renewable Limited into GFL, and the appointed date for this is 1st April 2020. And Part B is the demerger of the entire renewable energy business, which essentially comprises of the undertaking of AEL, which would be merged in GFL, and the equity shares that GFL owns in AEL, into a separate company, again a mirror image company, called Inox Wind Energy Limited, or IWEL, which would be formed essentially for the purpose of vesting the renewable energy business. Now this scheme, of course, is subject to all regulatory approvals, which includes the approvals of the shareholders and creditors of this company, and the approvals of the stock exchanges, SEBI, NCLT, and whatever other permissions would be required. As a consideration of Part B of the scheme, which envisages vesting the entire renewable energy business from GFL to IWEL, all shareholders of GFL who own one fully paid equity share, or rather who own 10 shares of Re1 each in GFL, will be given 1 share of Rs. 10 in IWEL. Again, IWEL would be a mirror image company of GFL, and therefore instead of owning a share in GFL, which owns both the wind business and the leaser business, the shareholders will end up owning shares of equivalent proportion in GFL, which would then own just the entertainment business, and IWEL, which would own the renewable energy business, and IWEL again would be separately listed. Now the reasons for undertaking this scheme, while we have kind of made out a longer list of all the reasons, but essentially each of these two businesses of GFL have different potential for growth and profitability. Each of these have different risks, different competitive landscapes, different challenges, different opportunities, and different business methods, and hence, it was necessary to segregate these two businesses, which were essentially quite different from each other, into two separate entities. Currently, a shareholder of GFL, when he invests into GFL, is actually buying stake in two different businesses, which are significantly different from each other. Hence, we thought it might be advisable, in order to enhance shareholder value, to segregate these two businesses to be held by two separate holding companies, GFL and IWEL. So that is the broad rationale behind doing this. As far as the status is concerned, we have applied to BSE and NSE under Regulation 37 as is required. Pursuant to this, we have already received an approval, which is technically called the No Observation Letter, both from BSE and NSE. This is usually granted after SEBI also clears it. So the No Observation Letter from BSE and NSE implies a SEBI clearance to the scheme, in principle at least, and pursuant to this No Observation Letter from both the stock exchanges, we have recently filed the scheme before the Honorable National Company Law Board Tribunal, the NCLT Ahmedabad bench, essentially to approve the scheme. We have sought directions to convene the meeting of the equity shareholders of GFL to approve the scheme, and to waive the meeting of the shareholders of AEL and IWEL, because both these are currently 100% subsidiary companies of GFL, and also to waive the meeting of creditors of GFL, AEL and IWEL, because we have consents of 90% of these creditors in value terms. Once this scheme eventually gets approved by NCLT, we will obviously take such further action in the matter in accordance with the prescribed regulatory requirements. So that is broadly the picture of where we are on the corporate restructuring. I will not spend too much time on the financial results, because essentially, as I said, there are no operations within this company, and therefore the financial results essentially reflect the consolidation of two separate listed entities, which is Inox Leisure Limited and Inox Wind Limited. Both these companies are separately listed, both of these have their own boards, their own shareholders, and they have both hosted their independent earnings calls, and anybody who was interested in following the earnings of these companies, I am sure would have followed those earnings calls as well, so let me not spend too much time on that. Broadly, the market capitalization of GFL currently stands at about Rs. 1,000 crores at the price of about Rs. 95, which was a recently quoted price, which is slightly lesser than the book value of the shares. The 52-week high low has been 58 to 163. We have also given you on the page 10 of the presentation, a list of the key investors. Broadly, in terms of the shareholding structure, the promoters own 68.72% of the company, Ds own 4.6%, fees own 4.2%, and the public/others owns about 22.48%. So that is a brief snapshot of where we are and what we are doing currently.